Welcome to Dalrymple Trading. My name's Nandis. We're looking at the pre-market analysis for WTI Crude Oil, S&P 500, and gold for Monday, the 17th of November, 2025. Apologies to my viewers. I haven't been making any videos lately because I've been focusing on a couple of other businesses in my life. However, I have been trading in the background and coaching others in terms of their trading as well. So I've been a little bit caught up. So apologies once again. I'll do my very best to be consistent with issuing out new videos where I can. So once again, apologies for not being able to upload a video sooner for those that were expecting a video to be done a lot sooner. So just looking at the markets and diving straight into it, the S&P 500. So what a sort of wild week it's been. So we've seen the S&P hit all-time highs, just a fraction away from 7,000. Then we corrected down to 6,635, went back up to 6,800, and then we sort of came back down on Thursday and Friday. Obviously, and then pre-market hours, we sort of found some support here at 6,750 level. So the sort of long-term outlook for the S&P 500, people are saying that it's obviously in a bubble, which I tend to agree. But I also tend to agree there's more left on this, right? I don't think this is a topping formation yet. We haven't had a like blow off top. A blow off top is basically where we sort of rally all the way up and we sort of get to that point where there's a lot of euphoria in the markets. I don't think that's happened. I think this has just been a little bit of profit taking, and if you follow the macro analysis, this movement is due to obviously AI stocks underperforming due to their dividends and yields that have come in. So that's the reason we've seen this correction. But in saying that, I do think there's further upside ahead before we, move into a secular bear market, which is yet to happen and probably can happen in 2026. I'm expecting this to potentially hit 7,800 to 8,000 as a potential upside target before we see any sort of, deep correction. So where we're at the moment, what I'm anticipating to happen here is we'll see a little bit of strength early next week, but the trend is still to the downside, right? So, um, one thing that we did notice here is that this sort of bear momentum on Thursday and Friday, we it still didn't break the lows of the prior week, right? So that tells you that there's still strength in this. So whilst we did go down, we didn't break the prior lows here the week prior. So that just gives you a hint that yes, there is a bit of strength left in the S&P 500. But what we might see is a short-term rally up, then down, and then eventually at some point we will obviously seek price discovery and break above the 6,900 level. Definitely try to hit the 7,000 because that's just a hair away, and it makes sense that we go and retest that. So I think longer term, obviously it is a bubble situation, no doubt. But just because it's a bubble situation doesn't mean that stocks can't keep going higher and higher. So that's the current phase that we're in, and we're here to basically trade what we see, not make projections ahead of time because we don't know when that downturn is going to be. It could be mid next year, it could be early next year, it could be the end of next year. So we trade based on what we see. So at the moment, there is still a short-term bearish bias, of course, but in the long term, we should be rallying further up. WTI crude oil, we saw a massive sideways action for a long time now. So we hit all-time highs at 62, 62 and a half, and then we've been sort of chopping sideways. We dropped all the way to 58,195, and at the moment we're seeing a sustained rally, slowly trying to retest the all times at 61. Again, I do think oil has been just slowly working its way down since earlier in the year. And obviously, that's the current case now. We're sort of still sliding down. This sort of momentum on the 21st of October that caused this rally was due to potential extra tariffs on countries that bought oil from Russia. But what we've seen is that off the back of that, nothing's really eventuated in the real world in terms of Donald Trump doing anything to actually tax anyone else. So that's the reason why this is sort of slowly drifted down. So I do think the long term to medium term bias on this is still to the downside. Of course, that could change with some macroeconomic events. If something does happen in Russia, or something like that with Ukraine, we could potentially see these a pre-steal or something like that. We can definitely see movement. But for now, the trend is still downwards. All right, getting to the good old gold. So we saw gold rally all the way up until the end of October, 21st of October. Then we saw a correction down to the sort of end of October here from the 21st to the 29th. Chopped sideways, went up, and then we sort of retested back to this range. So what this is telling us is there's still strength in this, right? So just because we broke down doesn't mean we broke down all the way underneath this level here. So this tells me there's still strength in gold. And if you're an investor, this is actually probably a really good time to buy, to hold. I mean, this is not going to give you immediate profits overnight, but I do think gold has got a lot more left, potentially doubling to what it is right now. Potentially, I didn't say it will. I said potentially, um, purely because a lot of passive investors don't have a lot of gold on their holdings yet. So once they start to buy into gold, we can see this continuation further to the upside. So if you are interested in buying gold, you can buy the ETF, which is called GLD, for example. So the reason why this is so patchy compared to, say, this chart is because this chart obviously is the CFD version, or the aftermarket hours, that runs across all time frames, whereas this one is the actual spot price, which is the actual trading hours within the day, right? So, but this one mirrors the actual price here, uh, although it's a little bit spotty. But if you do want to buy into, say, gold, you can buy one unit of this at $375 versus actually paying whatever it is here, which is 4 grand, right? So if you want to buy an ETF to invest into the future in gold, this is a great option. So something like GLD, this is the most liquid version of the ETF that you guys can buy into if you're interested in actually trading this thing. So I do think this is actually quite a good investment. Look, it's almost forming like a cup and handle type pattern where we've sort of gone up. Let me just draw it for you. We've gone up here. Sorry, let me just draw that for you. So we've seen, why is this not working? Trend line. Can't get the trend line to work. But anyway, I might make the video on that next time. Basically, this is sort of forming a cup and handle sort of pattern. You might see a little bit further to the downside, and then we'll see a rally back up, retesting all-time highs over here. So yeah, that's what's happening with gold. In terms of this week's upcoming market analysis, there's nothing here that sort of sticks out, but obviously there are some potential standouts that may potentially impact the market. But overall, I think a lot of the current movement in the market, especially the S&P, is due to the story behind AI stocks and how they'll perform in the medium to short term. So just to recap, like I said, I do think the S&P, in the short term, it's bearish. We might see a rally up and then down, but overall, at some point, we will try to retest these highs. So if you're an investor, even in the S&P, and you're trying to invest into this, just keep in mind that if you do buy now, you obviously you got to be really careful, because this can possibly go for another 6 months to the upside and then correct. So just got to keep that in mind. But if you're a short-term investor, you want to sort of buy into this for a couple of months, I do think it's a good investment, because I do think we will actually test 7,000 level and shoot past it before we actually get a potential bear market down the road. So that's just my analysis for today. I'll keep you guys updated as the trading week spans next week. Have a good week.